As you all know by now, I believe planning for your future is important when it comes to building wealth and becoming financially free. One of the most critical steps is looking at ways you can invest your money to maximize your returns. WeBull is an all-in-one, self-directed investment platform that provides an amazing user experience. Some of the key features are zero commission, free real-time quotes, multi-platform accessibility, full extended trading hours, and 24/7 online help. Create an account by clicking on my exclusive link in the show notes, and Webull will give you 2 free stocks valued up to $250. Even better, deposit funds into your Webull account, and they will give you an additional stock valued up to $1,400. Start investing today with Webull, and thank yourself tomorrow. Welcome to the Financially Free Journey podcast, and I am your host, Courtney Dyer. This podcast aims to dispel the seemingly complex topic of personal finances, money management, debt, credit, investing, and even retirement. And in today's episode, we are actually going to be discussing ways that you can manage your tax liability through financial planning. In order to discuss this topic, I have asked Trevor Hansen to join me as a guest today. Now, Trevor Hansen is a vice president and a senior wealth advisor for Zion's Wealth Advisors. He has over 14 years of experience in the financial services industry, specializing in comprehensive, personalized advice to individuals and families with substantial wealth. Shortly after September 11th in 2001, Trevor actually joined the United States Air Force Reserves as an F-16 crew chief, and being responsible for the lives of pilots and other crew members, it really shaped Trevor into the detail-oriented, critical thinker he is today. He served his country honorably for 6 years and still strives to apply the Air Force core values with each of his encounters. At a previous financial institution, Trevor was actually recognized as one of the most successful advisors on the West Coast and one of the top 10 advisors in the entire country. He has also mentored and trained hundreds of successful financial advisors and private bankers all over the country. One of the many ways he has succeeded in giving back to his profession. Thank you so much for taking the time to join me on the podcast today, Trevor. How are you doing?
I'm good, thank you. Thank you for having me. It's good to be with you and your listeners.
Yes, absolutely. And if you guys hadn't heard before, he actually joined us on a previous episode that you have to go tune into. It's called Investing for Beginners 101. So go tune into that one to hear some more of Trevor after this. So as a financial professional, you recognize that the outcomes on a tax return are the culmination of many occurrences and decisions. Tax efficiency is a vital part of a financial plan at every stage. And so you approach tax planning at both a year-round and a lifelong process. So with that in mind, can you give our listeners a brief description of how you use financial planning as a tool to help clients decrease and manage their tax liabilities?
Yeah, absolutely. So financial planning gives us the ability to look at what your tax situation looks like now, and also gives us a hypothetical view of what your tax situation might look like in the future. This helps us determine what your taxable investment portfolio should look like today and what types of retirement accounts you should be leveraging now.
Right. So it's that immediate process for your current tax bill, but also in the long run. It sounds like it's a very comprehensive process.
Absolutely.
And as you just described, financial planning is a key process that helps individuals with their financial success and really strategically planning for their future. So now there are some key areas to consider when planning for your taxes each year, guys. Some of those main areas are retirement savings, business ownership, education funding, charitable giving, and of course, portfolio management. So Trevor, talk to us about retirement savings. What are some of the options available to most people, and when should they consider them as an option for their own financial planning?
Yeah, absolutely. So you have 401ks, and you're allowed to put $19,000 in there yearly. That was as of 2019, right?
Great change.
Yeah. So the thing that people don't understand is their employees usually match 3 to 6% of their money that they contribute, but a lot of employees don't take advantage of that, right?
It's free money.
It is.
Yeah.
And, their employers don't mind when they don't, contribute, but that's part of their paycheck.
Right. It's giving up a part of your salary, essentially.
Absolutely.
Yeah.
Now, if you haven't saved for a long period of time, the government says, hey, if you're over 50, you can add another $6,000 in there per year so you can do a catch-up, right?
And that's called a catch-up contribution,
That's
right?
exactly right. And so inside the 401k, you have the before tax option and the Roth option. A lot of lower income employees, they actually use the before tax option to save on taxes. That's not such a good thing. They're not paying that large a tax bracket. They should be using the Roth. The benefit of the after-tax contribution, Roth contribution inside of a 401k is that you put after-tax money in that account and it grows completely tax-free.
That's really interesting because a lot of people, I think about their 401k contribution as a way to decrease their tax liability now, right? To get a bigger return, lower their income that's taxable. And so thinking about it in a way to really lower it for the future is a great way to look at it.
And your tax accounts obviously want to save you the most on taxes now, so they're probably going to suggest that you do the before tax contributions.
Right.
But again, when we're doing this financial planning, we're looking at, hey, are your taxes going to be lower or higher when you retire? If your taxes are going to be higher or the same, you should be doing Roth contributions and getting tax-free returns.
Absolutely.
And that's why you need to do planning, So as far as the IRA is concerned, if you don't have access to a 401k, and sometimes you can contribute to both, you could do $6,000 in an IRA annually and then $1,000 catch-up.
Oh, that's great. So another option, if you don't have a 401k through your employer, you can look at an IRA as an option.
That's exactly right. Now, if you're doing a 401k and you have extra money to put in retirement accounts and you're making less than $193,000 jointly, then you can contribute to a Roth IRA outside of your 401k as well. So there's a lot of options, so you need to do planning around these things so you're maximizing these accounts.
Oh, absolutely. So you could really do both, and that would be a great way if you qualify, of course, if you fit within the income. Interesting. Are there other options?
Yeah, I would say this first. The government created these retirement accounts to incentivize individuals and families to save for retirement. And so there could be different forms of retirement savings. Sometimes the corporations do it for you inside of a pension. Those aren't around very often anymore, so they're usually 401ks. Small businesses could use simpler SEP IRAs. So there's some more options there. So, again, the more common used retirement accounts are going to be 401ks, 403bs, and IRAs.
Right. I actually read a statistic a while back, and not sure if this is completely accurate, but it said that it's less than 20% of the American population that has a pension plan available to them. So really, the majority of our population is going to be looking at that self-funded retirement through like a 401k or an IRA.
Yeah, I'd even be surprised if it was that high, right? I mean, corporations don't like the liability of that. They're usually required to increase it by a certain percentage, even if the market's not going up, right? So, employers are getting out of it. They don't want to do it anymore. So they're usually replacing with the 401k.
So that's a unicorn. For those of you out there, if you have a pension plan, you've got a unicorn on your hands.
That's exactly right.
So now that we know about options like 401ks, 403b is another option, thrift savings accounts, IRAs, pension plans, those are some great options to consider when you're looking at retirement savings and concurrently managing your tax liability each year. Let's look at business ownership next, Trevor. How can business owners utilize their taxes and their business expenses strategically hand in hand each year? How does that work?
Yeah, I would just say that there's new tax laws passed. Some of the old deductions were eliminated, but there's some different savings that save you more on taxes. So right now you want to see if there's a 20% tax deduction or if you're eligible for this for a net income discount on your taxes. That's part of the new tax law.
Yeah.
And then also if you fund a retirement plan for your employees, that allows you as a business owner to put more money into that program, which can save you on taxes. A lot of business owners don't take advantage of that. They should. And then different tax credits that have become available through this new tax law. I mean, this really, you need to get in front of your accountant. You need to go through these details. The biggest thing I can tell you about your tax accountant is you need to talk to someone that's going to give you advice, that's going to ask you questions, that's not just going to collect information and put it into the system, right?
Absolutely.
But there's a lot of tax advantages with buying equipment, with deducting, depreciating deductions.
Right.
A lot of available ways to save money on taxes with businesses. But you also want to make sure you're pulling money out of your business for, businesses for downturns in the economy.
Well, I think the number one takeaway, if you're a business owner, if you're an entrepreneur, from this section is that you need to understand that there are options to manage and decrease your tax liability. So you need to come up with a strategic plan with a tax professional, specifically for your business and your expenses, because there are options for you to be strategic in that sense. So thank you so much, Trevor. There's so many ways that business owners can plan for and manage their tax liabilities each year and look at a variety of deductions that are available to them. Some of those are, home offices, insurance premiums, travel expenses. That's just to name a few examples. Okay, the next major area I want to dive into is education planning. So what is education planning and how can someone use that as a great tool to manage and really decrease their tax liability?
Right. So the most common program that's used for tax exempt growth is a 529 plan. So a lot of people think you get a tax deduction for adding to a 529 plan. That's not the case. You put after-tax money in there, usually limited by gifting limits, right?
Okay.
That's usually about $15,000 per year.
Is that per child, per plan, or per person giving?
Yeah, it's per child, $15,000.
Okay.
But the dad can give $15,000, the mom can give $15,000, so you could really get $30,000 in there per year. You can even upfront 5 years worth of contributions as well.
Hey, if you're in that position, guys, congratulations, right?
That's exactly right. But a lot of people overfund these programs. If you overfund these programs, you can pass it to another child if your child doesn't use it, right? So you can pass it to one of the younger siblings, or you can pass it to a niece or nephew.
Oh, okay. That's interesting.
But you don't really want to overfund it, because if you pull that money back out, then there's going to be a 10% penalty with the federal tax on it, right? And a state tax as well.
Yeah.
So
you really need to be careful when you're contributing money into this.
That's exactly right. But they're still your assets, so your kids don't own them. So if they have federal or state grants and they're trying to check the kid's income or assets, they don't qualify for their assets because they're the parents' assets still.
Oh, okay. No, that's good. Investing and diversifying your funds within the stock market is a top strategy that the wealthy use in order to continue to build their wealth. If you're trying to strengthen your financial health and have ever thought about investing, WeBull is a platform you need to check out. WeBull was designed by top experts in the financial and tech industries to create a streamlined and simple user experience. WeBull knows that you, as the individual investor, is an important part of the market and you should not be ignored. You should feel empowered with better information, tools, services, opportunities, and lower costs. Some of the key features are zero commission, free real-time quotes, multi-platform accessibility, full extended trading hours, 24/7 online help. Create an account by clicking on my exclusive link in the show notes, and Webull will give you 2 free stocks valued up to $250. Even better, deposit funds into your Webull account, and they'll give you an additional stock valued up to $1,400. Start your investing journey today with Webull.
There's another program, the Coverdell program.
Oh, okay. Is that as common as a 529?
It's not. It's usually not one that I recommend, just because it's considered the child's assets, like a UTMA or an UGMA account.
Oh, okay.
You don't want the assets in their name. Again, that'll affect the type of loans they can get, the types of federal grants and state grants that they could get for college. So you usually want to stick to the 529 plans.
Well, that's good. I mean, knowing that there's options, again, if you have children or nieces or nephews, that this could be a way to really help benefit them and plan for their future. And simultaneously, you have that gifting that you're allowed to do. It's a great option when you're thinking about managing your tax liability. But it really sounds like it's an important aspect to understand and really know what options are available to you based off of your income, where you live. Those are just a couple of examples in order to fully manage your tax liability and plan for your loved ones' education in their future. The next area I want to talk about, Trevor, is charitable giving. What is charitable giving and how can it be used to help your tax bill each year?
Yeah, absolutely. So you can give donations to nonprofits or churches, and you want to make sure you make the donations from the right place.
Right.
You could do cash, obviously, and that's usually a deduction on your federal taxes, right? But The thing you need to realize is if you have stocks out there, let's say you bought a stock for $10 or a mutual fund for $10, now it's worth $100, you have a $90 gain there. You can actually donate that stock or mutual fund directly to the charitable organization.
Wow.
And then you don't have to pay taxes on the gain, and then you get to write off the full deduction, right?
It's a win-win for the charitable organization and for your tax bill.
Well, that's exactly right.
Yeah, I like the sound of that.
You can do IRA contributions directly to the organization. Now, there's limits with the new law changes, but you could do that as well.
Right.
But you want to make sure, and it all could depend on, if you're using the standard deduction or if you're itemizing, so you need to check with your tax accountant on that. But if you have stocks with substantial gains, those are the best places to make donations from, not cash.
So I think that's just a really important aspect for our listeners to think about. If you have a portfolio that contains stocks, and to really talk to a professional about what is the best option, but know that that's an option for you, because again, it's a win-win, and you still get to give and be charitable, but you can also have some additional benefits. So good to think about. It really sounds like there's several options out there, and by utilizing charitable giving, you are of course helping, and you can remain passionate about that, but you can also help yourself. The last area I want to focus on is portfolio management. I think this is a really important part of financial planning. How can someone use their portfolio to help them not only manage their investments and their returns, but also to manage their tax bill?
Yeah, I think portfolio management's a big part of your overall tax bill, right? And growth in assets. If you have tax drag on your portfolio, it's not going to grow as fast. If you have a portfolio and you're in a high income bracket, let's say you're in a 30-something% bracket, and your stocks are turning over every single year, and you're not able to clip those long-term capital gains, then you're paying probably double or more in taxes than you should be. So
Ouch.
Let me explain that a little bit. So if you own a stock for less than a year, you pay ordinary income tax brackets, right? And
Right.
that can go all the way up to 30-something%.
Yeah.
If you own a stock for more than a year, that's considered long-term capital gains. That could be anywhere from 15 to 20%.
So a substantial difference.
Yeah, absolutely. And the reality is, if you have a stock and you don't need to sell and you can hold it for a long period of time, that's probably what you want to do, just as long as you're diversified correctly. But
Absolutely.
you have these large portfolios with high-income people that they're having these investments turn over all the time, and they're paying more taxes than they need to, and they're wondering why their portfolios aren't growing as fast as they should.
Because they're not looking at that tax drag, like you're saying. So
Yeah.
it's a big aspect of portfolio management. Is there any other, aspects that people should be aware of?
Well, then you have tax-free bonds, right? So if you invest in a state tax-free bond where they're, again, paying you money back with an interest rate that's tax-free, that's a pretty good deal. But
Absolutely.
then you have taxable interest as well. So you have to look at a thing called tax equivalent yield. What is my yield after taxes?
Right. Interesting.
So if your yield after taxes is more than a tax-free bond, then great, use a taxable bond. But if it's less, then use a tax-free bond.
Yeah. So really understanding that yield and how it correlates back to your individual portfolio is critical in really maximizing your returns.
Absolutely. And then you need to make sure you have the right people working on your portfolio. And that's where you start using individual stocks and individual bonds when you have a high net worth and you have a large portfolio.
Absolutely.
Because there's a thing called tax loss harvesting, right? So at the end of the year, you try to wash out some gains with losses.
Yeah.
Obviously, you want to wait 30 days for wash sell rules, but there's a lot of things you can do inside portfolios to save on taxes and have them managed correctly so they can grow more quickly over time.
Well, and that's where having your portfolio managed and working with a professional is really worth those management fees or commissions that you may pay over time, because you're going to get the advice and the knowledge and the expertise along with it.
Exactly, and that's where we come back to the planning again. You need to make sure you're doing planning so these individuals you're working with know what your tax situation is now, what it is in the future, and they're making the right choices on the assets they're purchasing for you and managing it correctly for you as well for taxes.
Yeah, I think that's a great question to ask your financial advisor or wealth advisor, whoever you work with, is what type of financial planning services are they going to be providing for you as well if you're investing assets with them? I think that's really critical to think about.
Well, I think you have two things, right? With wealth advisors or tax accountants, are you just telling them what you want and they're just taking care of it for you, right?
An order taker.
An order taker, which is a financial advisor. You give them your money, they manage your funds for you.
Yeah.
Are they doing any planning? Are they asking questions on how to improve your situation, take advantage of opportunities, fill gaps? These are the questions you need to ask.
Yeah, no, that's great. Great information for our listeners to think about. Any other nuggets of information for portfolio management?
Yeah, I would just say, again, when it comes to your tax accountant, just make sure they're advising you.
Yeah.
Again, they have like a TurboTax program too. And so if they're just gathering information from you, you could probably do that at home on your computer.
Yeah.
But go to a tax accountant that actually asks you questions that you can ask questions to, right? And then they can give you kind of the information you need to feel comfortable with it. And also they can collect the information they need to actually save you as much in taxes legally, of course. You want to make sure you're very, very clean on this. But the government does incentivize you in different ways to make charitable contributions, fund school, save for retirement. Take advantage of these opportunities.
Absolutely. Well, again, asset management is a great way to be strategic and to financially plan each year for your taxes. So, Trevor, before we end this episode, any last you've dropped so many nuggets of wisdom and information. I don't know if there's anything else. I'm sure there is. What else would you like to share with our listeners?
I would just say I'm a financial planner. That's what I do, right? So we look at all these different things. So we've been in front of tax accountant, trust attorneys, all types of professionals that talk to our clients about these things. And so, again, I'm not a tax accountant. You should go ask your tax accountant about these things, see if you qualify for any of these opportunities. But again, make sure you're doing proper planning, that your portfolio is being managed correctly, and you're taking advantage of the incentives the governments have put out there for you to save and take advantage of different investment opportunities.
Absolutely. The incentives are out there. The government has created multiple ways for you to be efficient with your tax bill. So you need to understand what's available to you for your income, for your assets, and really make sure that you are talking to a professional. And thank you so much again, Trevor, for joining today. Thank you guys for listening to the show. If you are not already, make sure that you're following us on Instagram. It's at Financially Free Journey, and Twitter at Financially J. And I post daily tips and motivation to really help you on your financially free journey. Until next time.
This information is not meant as a comprehensive guide to investing or as a source of specific investment recommendation. The information is general in nature and is not intended to be and should not be construed as legal or tax advice. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Investments are not insured by the FDIC or any federal or state government agency and are not deposits of or other obligations of or guaranteed by Zions Bank Corporation, National Association, or its affiliates, and may be subject to investment risks, including possibility of loss or principal value or amount invested.
Have you heard of WeBull? It's a simple, easy-to-use platform for investors just like you. Create an account by clicking on my exclusive link in the show notes, and WeBull will give you 2 free stocks valued up to $250. Even better, deposit funds of any amount into your WeBull account, and they'll give you another additional stock valued up to $1,400. Start your investing journey today with WeBull and thank yourself tomorrow.